The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box. I'm Karen Cho with Steve Sedgwick, and these are your headlines. Nvidia takes a $600 billion hit to its market cap in the biggest one-day wipeout in Wall Street's history, with the AI bloodbath knocking $1 trillion off US stocks. DeepSeek reverberates through global stock markets, with the chip sector under pressure in Japan and energy plays hurt in Europe.
Seaman Energy hopes to stem the losses after a DeepSeek-related sell-off, as preliminary first quarter revenue comes in just above forecasts at €9 billion. And SAP hiking its guidance, boosted by strong cloud business growth, with the CEO Christian Klein saying half of the group's fourth quarter cloud order entry was driven by, yes, you guessed it, AI. We're going to speak to the CFO, Dominic Assam. That's at 7:45 GMT.
President Trump talks up a bidding war for TikTok, suggesting Microsoft is in talks to acquire the social media platform. We were talking about the potential impact from the story crossing from DeepSeek over the weekend as the markets were gearing up yesterday. It was really rolling across from futures to Japanese, Asian markets, across to Europe, and then, of course, the wave hit on Wall Street. The realization that perhaps AI can be developed at a much lower cost point after claims from DeepSeek about its large language model costing just $6 million to develop. And of course, in just 2 months, a very quick time frame. So what we saw, Nvidia, this was the epicenter of where the pain hit on Wall Street. The stock, you could see, closing down close to 17%. Losing $600 billion in market cap, but also taking with it other big tech plays in the picks and shovels arms of the business to those big hyperscalers. The market cap stocks have really dominated the story we've seen on Wall Street in recent years, so $1 trillion coming off the Wall Street trade. So this is the casualty list from Broadcom shedding 17%, so similar territory to Nvidia, Micron, another big tech name, ARM Holdings down 10%, AMD shedding 6%, 8% off Dell, right across to some of the other big players. And of course, Microsoft, as we talk about models, down 2% odd, Alphabet 4%, and really was a bloodbath on these big technology names. US markets more broadly, what was interesting to see the pivot towards so-called growth names even in the technology sector. The likes of Apple that has spent a lot less on its AI development was seen as one of the winners that was right at the top of the S&P 500, moving positive and putting somewhat of a prop underneath that selling that you saw down 1.5 almost percent by the close of trade. The Dow, same story here, was a tech play that was right at the top. It was Salesforce. That was the most positive contribution. But of course, right at the bottom for the major boards was Nvidia with that slump from the chip-heavy stock. What we're seeing, that 3% off the NASDAQ. Look at some of the other AI-related energy stocks. The realization just kept hitting that if we were not needing as much compute power, what did it mean for some of those big energy stocks, which have been another tier of how the markets have been playing the AI story. And you can see across the board from Siemens Energy down 19%, Schneider Electric, a big name, of course, in Europe around the AI play, down 9.5%. And you can see other big American names also in the red, from Constellation Energy to Vistra Corp. To the Asian chip stocks, how are they recalibrating in session today? And let's just take a quick look at some of those big names across the board. They are still witnessing selling today, and you can see it right across in these very big names. Advantest down, SoftBank shedding 5%. And the big story yesterday, too, as DeepSeek was unfolding, was that it was a complete U-turn from a week earlier when we were talking about Stargate and the fortunes of OpenAI pushing AI forward, backed by the financing arm of SoftBank. So you can see a real reset on that stock today, and other big names across in Asia in the red. US futures, this is how we are setting up for today. Any stability? Well, we are expecting to see a flat line for the S&P 500, a faint amount of green on the NASDAQ. The Dow expected just to tilt a little bit lower. So it is very cautious still at this hour, Steve.
Yeah, absolutely stunning 24 hours on these markets. Donald Trump said the deep-seek drama should be a wake-up call to the US tech companies after claims it cost only $6 million to produce. Its latest AI model put US companies' mammoth capex under fresh scrutiny. Trump told reporters he sees the low-cost model as a positive development. That is fascinating. The Trump reaction is so fascinating. He didn't have a go at China. He didn't say that it's a threat. He said it's a positive development. That is extraordinary, since it could mean less spending is needed to get the same solution. I mean, think about it. 99% of the companies we talk about on a regular basis, they don't make AI stuff. They buy AI stuff. Think about it. It's amazing for most companies. But in claims CNBC has been unable to verify, Alexander Wang, who is the founder and CEO of Scale AI, accused DeepSeek of violating US export controls.
What we found is that DeepSeek, which is the leading Chinese AI lab, their model is actually the top performing, or roughly on par with the best American models. My understanding is that DeepSeek has about 50,000 H100s, which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, I think they have more chips than other people expect, but also on a go-forward basis, they are going to be limited by the chip controls and the export controls that we have in place.
Do you remember when OpenAI was worth $157 billion? Okay, just reminding you. OpenAI CEO Sam Altman has welcomed the DeepSeek release. Really? Really? Have you, Sam? Have you really welcomed it? I don't believe that. But anyway, you've welcomed it, describing the model as impressive in a social media post. Altman said OpenAI will accelerate some upcoming releases, pledging to deliver better models. He also appeared to push back on expectations that future models would need less computing power, saying, quote, more compute is more important now than ever before. Speaking to CNBC, an Nvidia spokesperson praised DeepSeek as an AI advancement, saying it showed how new models could be created using chips that comply with US export curbs. Anthropic co-founder Jack Clark said in a blog post that the development would make AI controls more difficult, with global capabilities taking a, quote, one-way ratchet forward. Arjun joins us, and we've got a great guest sitting next to you as well in a few moments' time. But there's so many positive things to say about this. Not if you're an Nvidia shareholder, not if you're a shareholder of companies that have spent vast amounts of money trying to put a more expensive product out there. But in terms of what it means for the democratization of AI, for the vast number of people who are going to have to adopt it, surely this is good news.
It is, Steve. If you'll indulge me for a couple minutes, just to make 3 points.
For as long as you like. We can spend half an hour on this chat if you like.
Just 3 points to your point. I think 3 themes, because these are themes that I think are going to impact the investment case here for AI. The first one, the commoditization of AI models. The second, China's strength and importance of open source. And third, the shift in focus from bigger and bigger and bigger models to a term called test time compute. And let me just very quickly dig into these. The commoditization of AI models is something we spoke through all of last year, and all the AI folks I spoke to said, look, the model will not be as important.
The Chinese could be there as well.
And the Chinese could be there. The model's not going to be as important as the applications. But on top of it, effectively, they'll all become commoditized, and there'll be a handful of very good models, some for certain purposes, some for others. And we're beginning to see that really become reality here with what DeepSeek is doing. The second, China's strength and the importance of open source. For a long time, how far was China behind? How far was China behind? Not that far behind. They were there. They have been for a long time. It wasn't a surprise. I remember when ChatGPT came out, it wasn't a surprise that all of a sudden, just 2-3 months later, all the big Chinese tech companies had AI models ready to go. Wow. They were there. They were working on them. They have been investing. They were not that far behind. And importantly, open source. OpenAI and others are going for these closed kind of models. The Chinese have opted for open source, effectively allowing this source code to be released and built upon. And this has often spurred innovations in this category as well. One of the big developments that's happened over the last couple of days is Hugging Face, the biggest repository of AI models, saying it's looking to recreate the DeepSeek R1 model to validate it.
Because it's open source.
Because it's open source. And then we may get an idea of the cost, the true cost of it. And just the final point, the shift in focus from these bigger and bigger and bigger models with more and more and more compute to a method in AI known as test time compute. This shift from big training to now almost allowing the same amount of compute, but giving the models time to think, kind of like a human, going through different paths to arrive at an answer. So you may see when you use these so-called reasoning models that you may offer a prompt, and it might just take that bit longer to get the answer because they're not actually going to add more compute. They're using existing capacity to come up with an answer. And so that's the big tech shift.
Just 30 seconds. We haven't mentioned the geopolitics here because we know there have been chip export controls, sending high-end chips to China. But DeepSeek also stores information on servers in China. So how does this impact the geopolitics around technology?
Well, it's open source, which makes it a lot more difficult, I think, to put those restrictions on the model itself. But certainly the hardware restrictions could come, again, back in focus.
Arjun, thank you. We've got Mark Horton, who's joined us, Head of Global Equities at Lion Trust Asset Management. Mark, thank you very much for joining us. I think one of the big questions we're dealing with this morning is how consequential is this for technology? Because there have been a couple of angles about how much compute power we use, whether that is the case. And I've seen stories saying, look, if we accelerate AI, we could actually be needing more compute power because we're moving towards physical AI. So just give us some takeaway messages first up.
So I think it's hugely consequential. I think it's extremely exciting. And I think Mark Andreessen said over the weekend that it was one of the great gifts to mankind, in a sense, offering up an open source model. The democratization of AI is going to be absolutely fantastic for all those smaller companies that want to build their own small models to do their own small businesses. So in that sense, it's absolutely fantastic. I don't think it necessarily takes away the business models of the much bigger companies. I don't think it destroys Nvidia because I think there will be a constant need for more and more compute power. There's never been an environment where we've needed less compute. So I think we can safely say that the compute growth will go on. Nvidia will still thrive in that environment, but I think what you saw yesterday in the markets was a very fair reset of the risk reward between the makers of AI and the users of it.
It does feel as though we're at a tipping point, and whether the capex model that we've seen from these big Mag 7 stocks needs to change because we now have new evidence that something can be done on the cheap. But there was also another aspect that came up, which was something I was mentioning earlier yesterday, about whether American companies would trust Chinese technology. And I noticed Wedbush picked up on that, saying, look, there's no way 2,000 major US companies are going to lean into this Chinese technology. Maybe if it's developed by an American company down the track, yes, but at this point, they're not going to put large amounts of data into DeepSeek. So what does that mean in terms of how we think about these stocks that have sold off and whether there is a value point at this stage?
Before Mark answers that, can I just relay a conversation that Arjun had with, you said that, you're right, they don't like it because it's Chinese maybe. I understand that, your concerns about it. But you said that there's other companies are now going to run the whole model because it's open source.
Which is my point, right?
Yeah.
With other
So it doesn't have to be Chinese, it's open source technology. So as soon as it's out there, it's ubiquitous technology.
Which was part of the question, whether there's a time lag now between other American companies picking it up.
But it won't be American or Chinese, that's the whole point. It will be ubiquitous, it will be global technology.
Yeah, and it won't necessarily be based in Chinese servers and on China technology, and that's where the open source question comes in, I think.
You need to differentiate here. If you're using the open source model in a desktop environment, you aren't attached to Chinese servers. If you are downloading the app, and it was the highest downloaded app, it's actually exceeded ChatGPT in terms of app downloads, then you are operating on Chinese servers. So there's a very clear and important difference here. So in the world of business and the way entrepreneurs will use it, they won't be dependent on having their data sitting in China at all.
So what does it mean in terms of what we saw the selling yesterday? Do you think this is what Wedbush called a golden opportunity to get back into technology stocks, or would you be somewhat cautious here?
So as I said earlier, I think it was a really powerful, sort of quite instantaneous repricing of risk. 20% down for the makers of AI. And a lot of, as you said earlier, a lot of the users of AI, like Salesforce is a great example, were up yesterday. So we actually had the biggest outperforming day of the S&P equal weight versus the S&P since 2020. And it's a sign to me of this repricing of risk and the market maybe getting a little bit of a wake-up call and realizing that it isn't as obvious as you think. It isn't just a case of buying
I love it
Nvidia.
because it's like the oldest commodity any commodity. I cut my teeth on oil reporting and OPEC. And if the price goes down, It's not zero-sum gain, actually, because it goes down, the consumers get it cheaper, the producers don't get quite so much bang for the buck. But my goodness me, potentially that could spur economic growth. So I see democratized, look, we don't know if this is the Sputnik moment or not, but it looks pretty mighty, as Mark said, and as you guys, you're the experts. But if it means that everyone who's got to have this technology going forward, every company we speak to, they have to have this technology. If they're going to get it cheaper now, oh my goodness me, that could be a real spur for global economic growth, couldn't it?
I 100% agree with that. I think it's absolutely phenomenal in that respect.
And Mark, in terms of the tech landscape, look, a lot of the focus was on the infrastructure players as well in AI, Nvidia and Broadcom, etc. Is this good for the hyperscalers? Because they are selling a lot of these AI technologies through the cloud to enterprise. Does this benefit them kind of perhaps at this point more than the infrastructure players?
So I think they're definitely better placed than the infrastructure players, probably. There's always been a question in my mind about the amount they spend. Mark Zuckerberg last year said, I've got to spend this money because the risk of not being involved is much greater than the risk of overspending. I think there's a very high chance, and I think they will all admit there's a pretty high chance they will have overspent. But it's been a really strange world. They make so much money and they have so much money that they could afford to do that. Their business models themselves will be impacted very positively by more proliferate AI. So I think I would definitely be favouring hyperscalers over infrastructure.
So going into the tech earnings season last year, was the market giving a lot of leeway for these massive capex numbers from big tech? Does the market give that kind of leeway this year?
So that's going to be the really big question. The thing I'm most excited about as we go into these M7 reports in the next couple of weeks is, will they say anything about capex other than what we've already seen? We've already had some capex hike announcements. Now will we see something slightly more measured?
Mark, one of the things that I was thinking about yesterday, we left the mountain last week, we left Davos, and the whole story for the week was about US exceptionalism and everything else in the slow lane. Do you think that is now flipped on its head? Because if this technology is accessible to the world, then it's not just a story of the US spending $500 billion over 4 years with Stargate, having capital pouring in at the seams because US technology is the only game in town. Doesn't it change that US exceptionalism story?
I think it does, but nothing ever happens in huge steps. I think at the margin, it shows you that there are other options out there. It allows everybody to rethink. I think one of the ironies about this is that these new models rely on essentially human intelligence ways of doing things. This reinforced learning is the ability to try and make a decision about whether to pursue this line of reasoning or this line. So that's actually quite ironic, whereas the American way has been, let's just spend.
Well, final question. Obviously, what I love about public markets is you know exactly what something's worth straight away. Private markets, less so as well. A complete revaluation of the private market and the VC-held assets, especially. Sam Altman's OpenAI, apparently it was worth $157 billion at its last round of funding. I'm not an expert on AI, but I know a thing or two about a slide rule on a company's valuation. And on last year's revenues of $4 billion, with a market cap of $157 billion, it said to me there was an awful lot of growth built into this company. Any thoughts on what if Nvidia, which is still going to be making vast numbers of chips, is worth 20% left, 17% less today? And again, I believe the market's always right. What is OpenAI, which A, doesn't have the revenues yet, B, the valuation is built on future projections, and C, has the biggest competitor, which is open source, just come into the room? What does $157 billion look like today? If you had to buy OpenAI today, what would you pay for it? What would you think the market cap is?
That's a really tough, that puts me right on the spot.
It does, doesn't it?
I certainly wouldn't be paying.
That's why you were pleased when you sent me the email yesterday that I got you in at 6 a.m.
I certainly think 157 billion is clearly not the right price.
I mean, do we just take 20% off and see it there, so 120, or do we?
Well, the starting point is always going to be that you take 20, 30, whatever percent off, and then you start to evaluate it. This is 24 hours in, so there's a we need time to work out exactly what's going on. But I do think that we do know that this massive spending spree has been done ahead of the demand curve.
Yes.
We don't know what the demand curve looks like yet. So it's actually really hard to know exactly what revenues will be generated and whether actually maybe these megascalers get any sensible return on the capital they're spending. We just don't know yet.
Wow.
It's a great point around the private market, because there is another company here that we should probably mention, which is Mistal AI. It's a company that Darja and I have been talking about at every French technology event we've gone to, but $640 million in the latest raising. And the story that we were told was that these startups needed a lot of compute power, so the fundraising rounds had to be very large to try and account for that. Now, as we talk about the compute power here, and I think there's still questions around DeepSeek and the compute power that it used, does it mean that the fundraising rounds get smaller, that there will be pushback on the equity and debt side in future in these raisings?
For sure.
Yeah.
For sure, which is fantastic.
Yeah. Do you want to have the final word?
Yeah, well, just to Karen's point, a lot of the VCs last year were saying we have to invest, but they were aware that valuations were high in the sector. They were very well aware of that, but it was, again, to what Mark was saying about what Mark Zuckerberg was saying around we have to invest now, and that was the narrative. How much this changes.
You said that about what, metaverse, or did you say that?
No,
that
was about AI.
When you said, we've got to spend money on this now or do more later, it made me think of his metaverse. Anyway, we better leave it there.
We must say thank you to both Arjun and also to Mark. And Mark, thank you very much for joining us. Mark Horton with us, Head of Global Equities,
Did you have to get up
Trust
earlier?
Asset Management.
I did a little earlier, yeah.
Thank you. Our viewers appreciate it, as do we.
Well, for more on Arjun's story too, you can check out this on CNBC.com on how Chinese AI is faring against US rivals. Ahead on the show, Siemens Energy's preliminary Q1 results top expectations, but is it enough to turn around yesterday's 20% drop? We'll discuss. Plus, President Trump talks up a bidding war for TikTok, throwing Microsoft's name in the ring. And SAP raises its operating profit and sales guidance for the year as it ratchets up its focus on AI. We'll be speaking to the company's CFO. That interview is coming up at 7:45 GMT.
SAP has raised its profit and sales guidance for the year thanks to strong demand for its core cloud business. The European software maker now says it expects operating profit to rise between 26 and 30% this year on a constant currency basis. Karen and I, of course, we spoke to Christian Klein in Davos. We're going to speak to his CFO now. That's Dominic Assam, and he'll join us at 7:45 GMT. Elsewhere, Siemens Energy has posted preliminary first quarter revenue of 8.94 billion euros. That is slightly ahead of consensus and says it expects to exceed its pre-tax free cash flow guidance for the full year. The release came after a session that saw shares fall almost 20%. I think we can call it 20% with that decimal, with DeepSeek hitting expectations that AI demand could boost the energy sector. Annetta joins us with more. Annetta, we spend a lot of time talking about Gamesa and windmills and hydrogen and all kinds of things with Siemens Energy. We spend less time talking about their AI capability. Enlighten us.
Yes, it's interesting. I actually had to look into it a little bit as well. And so the story is that they're not only just doing windmills and other stuff when it comes to renewables, but they're also big in building up the grid. And the fantasy last week was that if the energy demand will skyrocket with the heavy investments in AI, there will be also a lot of demand for exactly that grid, which Siemens Energy provides to big data centers, which of course are needed because of the potential higher energy demand from AI solutions. Now, with DeepSeek hitting into the game with an apparent solution which doesn't need that much energy, the whole fantasy yesterday evaporated in just one day. And if you look at the share price before the inauguration of Trump and before that huge announcement, it hovered around 50 euro, and now we're nearly back where we were before last week at 48 euro something. And with the numbers yesterday released after trading, after the markets were closed, closed, there is a slight tendency upwards. And here comes Gamesa into play, I would say, because if you look at the sub-sector Gamesa, the numbers are also a tad higher than expected. The loss, though, is a bit wider than expected by analysts. So it remains to be seen what the real market, when it opens, actually is doing with those number sets. But overall, the numbers look actually positive, a little bit better than expected. As I said, order intake with Gamesa is up 51% year to date, year on year, I should say. Revenues are also higher with Gamesa, and the margin is also a little bit higher. It's still, of course, a negative margin because bottom line is still negative. So the overall numbers, as you were mentioning, came in also a tad higher than expected by analysts. So the business, that's probably the message here, the business is intact, but of course the fantasy from that grid fantasy, which we had last week, is out of the market price.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.